I am live with Andrew Spence, the author of Fleeced, Canadians versus Their Banks. And so, Andrew, you don't know this, but you were recommended to come on the podcast by a longtime listener of the show, my friend Spencer. He reached out, he said, you got to have this guy on. And so when Spencer reaches out with a request like that, I don't take it lightly, okay? I have a lot of respect for Spencer. So he's read your book. He's listened to you on different interviews, I'm sure, and he's a fan of your work. So for anyone who doesn't know you, who doesn't know your book, what is it that you wrote? Who are you? What is Fleeced all about?
Well, thanks for having me here today, Anthony. And if Spencer says jump, everyone says how high, I guess. So listen, my background is I'm an economist. I started my career many years ago in London at Her Majesty's Treasury, as it then was. And just to show how old I am and how long I've been doing this, Margaret Thatcher was still Prime Minister.
Wow.
And Nigel Lawson was still the Chancellor. So I came to Canada here to work in the very late 1980s. I've worked for some banks and some asset managers over my career. And all through that time, I have been very concerned about how concentrated Canada's economy has become.
Okay.
All the key strategic industries in Canada are oligopolies. So the banks, the most obvious one, which I wrote about, telecommunications, airlines, we've only got two really. Railroads, two. Groceries, three. So when you start to add it all up, we've got a lot of industries that are concentrated. And what do we know about oligopolies? We know that the price that they sell us their services or goods are higher than a competitive market. And we know the quantities we get are lower. You know, whether that's getting a loan from a bank, getting a mortgage from a bank, or the quality of service that you get. Mm-hmm. And we've seen Canada's economic performance dwindle substantially in the last 10 years.
Sorry, Andrew, just come in a bit closer
sorry.
or bring the mic in.
Yeah.
Just want to make sure everyone hears you well.
Yep. And so we've noticed economic growth has been dwindling. And so I thought it was time for us to have a conversation about that.
Yeah.
So I pitched a publisher. I said, Ken White at Sutherland House Books. I said, Ken, we got a serious economic problem here in Canada. Various levels of government want tomorrow to be like yesterday. They're not really interested in competition particularly. They don't understand the benefits of competition, and they certainly don't understand the downside of the feather bedding that they provide for all these industries. So I said, let's do a book on the banks. I know them well because I've worked in a couple. I know where all the tricks are. I know where the policy's gone wrong. And he agreed to do that. And so that eventually got published as Fleeced.
Wow. So when did the book come out?
Book came out September of last year.
Okay.
So it's been in the works for about 3 years, off and on. People say, how did you write the book? Did you do 1,000 words a day? Did you? And not really. I mean, I did 3 or 4 chapters at a time, put them together, sent them off to the editor, and they take their time to come back to you. So it's sort of an on again, off again process. But what was interesting about that whole process is that, and this is feedback I've had from many people that have read the book, is that as my editor started to read the book, he said it was starting to make my blood boil because I began to realize just how expensive the system was, just how many fees there were, just how widely distributed they were, and how I was being held hostage. And subsequent to the publication, some of the interviews I've done with people, one guy in particular was quite amusing. He said, I was reading your book on my tablet and I wanted to throw it against the wall.
Yeah.
And really at the end of the day, what do I want people to take away from this book? I want them to have the language and the knowledge to understand their economic predicament. And then it's entirely up to them whether or not they want to engage with their political representatives. Because one of the reasons why the banking system is, in Canada, pretty much the most expensive in the world is because public policy shelters them. And the answer to why that's the case is because politicians favor stability over the disruption that comes with trying to get economic growth stronger than it has been in the past. So they want the system to be nice and stable. They don't want to have the experience that the Americans and British had in the financial crisis 15 years ago. And so we would much rather tomorrow be like yesterday, have no surprises, and bump along. The cost of that is economic growth is slow.
Okay. But is the benefit stability. So you just mentioned that the UK and USA had a very different experience than we did in the 2008 financial crisis. So is that because we were set up to be a more stable banking system? And does that benefit us that way?
It's an interesting set of questions. So before I go back and answer those questions, I just want to illustrate kind of where we've been since the financial crisis, right? So it was unfortunate in the United States that many politicians characterized the intervention of the state to stabilize the system as a bailout. It wasn't a bailout. The US Treasury actually made money on its stabilizing intervention. So one thing we know, whether it's a central bank intervening to defend a currency that everybody wants to sell, or recapitalizing a banking system when investors have pulled back for fear of loss, is that stabilizing intervention is always profitable.
Profitable for who?
Profitable for the person that does the stabilization. So, for instance, the capital that the US Treasury put into the banking system to stabilize fear of insolvency made money for the Treasury. It didn't cost taxpayers a penny. And this isn't well understood.
Yeah. Can you explain? How did it make money?
Well, because they invested at a high dividend rate that making the banks pay an additional price for this capital they couldn't raise from the private sector, from investors. And so the combination of the dividends that the Treasury Department received as part of that investment, if you like, and the fact that all the money got paid back meant that they actually made money on the transaction and didn't lose money. The other thing you've got to think about, too, is this. Here we are, some 15-odd years later, and how has economic performance been in the United States relative to Canada over that period?
Much stronger.
Right. Even though they had this very disruptive, almost economic near-death experience that required, a large share of state resources to stabilize. Think about Canada, right? It's not very competitive. The banks are able to charge very high prices for a multitude of transactions. They pay virtually nothing on deposits, and so they're making a big spread on what they lend the money out at compared to what they borrow from you and I as everyday depositors. And so every day there's a small bailout going to the Canadian banking system from its customers. They don't have to take risk. They don't have to be innovative. They don't have to face competitive pressures. So they don't get out over their skis and potentially threaten system stability. And so we have our own bailout here every single day of the year in Canada because our banking system takes about 8% of GDP out in revenue compared to about 6.5% in Australia, the UK, and the US. And if you look at European banks, it's even lower. It's like 4% of GDP. So our banks are closeted by the fact that there is no competition, serious competition for them that puts barriers in the way of them being able to charge what they feel the market can bear.
Okay. So I'm familiar with the more decentralized model of banking in the US with all of the different local banks, thousands of local banks,
right,
hundreds of maybe bigger banks, and then it does centralize to those, big ones like JP Morgan, Chase, so on. However, in UK, Australia, New Zealand, I'm not as familiar with how they operate. So they are more decentralized than our big six?
Not necessarily, no. I mean, Australia and Canada are very similar in terms of banking structure.
I would figure, just being a Commonwealth.
Very, very, very similar. Similar history, similar evolution. But they have much more competition in their banking system than we do, because their authorities got tough with them, with the banks, and began to call them out on certain egregious fees and transactions. Now, this is an interesting segue into the discussion of open banking, which I think is an important development everywhere in the world but Canada. So why is that important? Economists would say that Canada's banking market is not contestable, which means there are many barriers to entry to enterprises that wish to come here and compete with the banks. And there's a lot of reasons for that, right? I mean, it costs a lot of money to set up a bank. The banks already have the best customers. So if you would, most creditworthy customers. So if you were to come here to compete, you may end up with the less creditworthy companies. You would likely have to hire a lot of mid-career professionals from the banks who know the marketplace well, know how to do credit well, and that's expensive. And then you've got a multitude of regulatory agencies that you have to face. And Canada puts more emphasis, official Canada, puts more emphasis on stability than it does on competition. And so you have to deal with a lot of intrusive inspection from a multitude of regulatory entities and agencies that just raise the costs of entering. And so many global banks just decide it's not worth coming. Now, this describes, I think, Canada's banking system before the advent of financial technology or fintech. So open banking is a way to unbundle all the financial services that a bank will offer its customer. What banks have done very effectively is capture their clients and keep them inside their bank, inside their institution, for things like payments, for loans, for credit cards, wealth management. Name it, it's been internalized. Mm-hmm. What open banking does is it gives you, the bank customer, the opportunity and the ability safely and securely to access many non-bank providers of financial services at much lower cost and much better quality service. So, for instance, the UK introduced the notion of open banking. And how would it work? You basically have an app on your cell phone, right? And so you want to buy some foreign exchange. You say, I'm going to Europe. I want to buy some euros. How much? I can buy it from here, from another company other than your bank, at much, much lower cost, much better prices instantaneously, instead of having a delay. And so what the UK decided to do was it brought its 9 biggest banks into a room somewhere at the Bank of England, perhaps, or where our now Prime Minister was governor, or perhaps one of the offices and meeting rooms I used to work in the Treasury, and said to the banks, look, we are going to introduce open banking in this country. And that means that you have to get ready for that. And that means you have to interact with these fintech companies that are going to provide these services. And we're going to give you 2 years to do it, whether you like it or not. And to make sure it gets done, I'm going to nominate an implementation trustee, so that after all the haggling and the attempt to defend vested interests and privilege, if you guys cannot agree, i.e. the banks and the fintechs, then the implementation trustee will make the decisions for you and will tell you what the terms of engagement are. So 2 years later, open banking came to the UK. And
when you say that, just fintech companies were allowed to start and operate?
Yep. They were there ready to go. And the banks had to transfer data on you as a customer to the fintechs in order to make this happen. Mm. So who owns the data is a big issue. And how secure that data is really, really important for this to work. Now, if you speak to people in the UK, they will tell you that, of course, there are problems with fraud, right? When you go down this route, but they are no greater than the problems we currently have with fraud. And if you say, did you do enough, i.e. did you cast a wide enough net to catch enough fintech providers to get the competitive gains that you wanted to get, the answer would be no, we should have gone further. Now, this was 2018. Where are we today in Canada? 2025. Mm-hmm. Where are we? It's still not here. Mm-hmm.
Can I ask, what are examples of these fintech companies and what exact services do they provide?
So there's a company called Wise, and that's a payments provider, right? So in the old days, I'm old enough to remember traveler's checks, right? So if you were going on holiday, you got these checks that you put your signature on and another one, and you go to a bank and they give you some money in whichever country you were in. Mm. These days, if you have a Wise account on your phone, and you load it up with, if you're going to Europe, €1,000. If you're going to the United States, fewer of us go there at the moment, right? $1,000. You just take that cell phone and you want to make a payment, you go click, and it comes out of your Wise account, not out of your bank account. And it will give you lower transactions fees. It will provide foreign exchange at a much lower price than the banks will. And it's the convenience of instantaneous settlement. Mm-hmm. Boom, it's gone. It's out of your bank account.
Okay, so I do that right now with Wealthsimple. I have a Wealthsimple preloadable MasterCard. It has no foreign exchange fees. I was just in Costa Rica, and I used it at a Costa Rican ATM to pull out, I think they're called colones. They're a Costa Rican currency.
So what you don't see in the background is the payment system architecture.
Okay.
So this is a slightly technical place to go, but it's worth thinking about.
Okay.
Canada's payment system is basically comprised by two entities. There's this entity called Payments Canada, which is a not-for-profit agency that has oversight over our payment system, right? How we make payments to one another. And it is responsible to the finance department. And then you have this private company called Interac, which is owned by the banks, basically, right? They're the biggest shareholders. We don't know what their shareholding is because it's a private company. And when Parliament has asked Interac, who are your biggest shareholders? And they say, well, a private company, we don't have to yield that information, which is perfectly true. So we have something called Interac e-transfer, right? Everybody uses it every day. But this is what we call a messaging system. It sends a message to your bank to go away and clear and settle this transaction. But it doesn't happen immediately. It happens at some point in the future. And so there are frictions in our system because we don't have this instantaneous settlement system. You may not see it when you go down to Costa Rica with your Wealthsimple, but we still don't have the technology in the background that makes that instantaneous. And so there are issues with potential for fraud that you wouldn't have if you had this instantaneous settlement.
Okay.
So why is it that we don't have that in Canada? The problem is simply because Interac is working to a commercial interest, basically the interest of its owners, and Payments Canada is working to a public interest, i.e. your interest and my interest. And so while we have elements of fintech in Canada, it's not wide open and it's not as safe and as secure as the fintech development and the open banking that's prevalent in many countries. Even Rwanda has open banking, and we don't. Canada has been talking about the instantaneous settlement system, payments and settlement system, for well over 10 years. And we will be just about the last developed country in the world to get this essential piece of infrastructure in place. And if you talk to the people that are really on the inside of this, and I'm not, but I can only sort of animate for people what I hear, is even when we get to the real-time rail, which is supposedly is going to arrive next year, the technology behind it is pretty much the same thing that we have today, which is already antiquated and is already inadequate for us to make the move to the 21st century. So we're already a quarter of the way through the 21st century, and we have a 20th century banking system and payments provision system. It's humiliating, I would think. But the issue is that many bank customers don't even know about this state of affairs in other countries and how much more advanced they are and how much more competitive the system is. You know because you're young, right? And so I speak to people your generation rather than mine, and they say, yeah, I've got Wealthsimple's doing this for me, and I realize I'm getting screwed on deposits, so I'm arbitraging that by using Wealthsimple. If you talk to the folk at Wealthsimple, they're very happy about the progress that they've made, but there are still many, many frictions in the system. For instance, if you want to transfer your brokerage accounts from a bank-owned broker to Wealthsimple, there's still a lot of paper involved. and it can take weeks. And so, we've got this sort of antiquated payment and transfer system that is causing real problems. So the irony, of course, is that we put a lot of emphasis on stability because we don't want screw-ups. Now, that's understandable. Finance is important, right? Cast your mind back to the postal strike in the winter. Mm-hmm. There were large payments sitting in postal bags in the sorting offices of Canada Post because so many people still write checks.
Got it.
Right?
Yeah.
Or that you were in the business of transferring your account from a bank, let's say to Wealthsimple. So who was managing that money in the interim? Where was it? Who did you talk to? There's all kinds of problems and questions that arise because of that. And so, to my mind, we need to get serious about this. My own sense is that Interact should not own core piece of the payments infrastructure in Canada when it's so clearly been used as a way to slow down progress. Now, I understand why the banks want to slow this down, because if you start to unbundle their clients from them, and clients have the opportunity to execute on a single line financial service like foreign exchange, like a payments challenge, they're going to lose a lot of revenue. And so I understand why they don't want to do it. But in all such things, the longer you put off the day of reckoning, typically the more difficult that day of reckoning will ultimately become. And who bears the cost of that? We do.
So how much more are we really paying?
Remember I said at the beginning,
yeah.
What's the revenue that's coming out of the economy for our banking system? There's 8% of gross domestic product every year. In the US, the UK, Australia, the average is 6.5. So that's 1.5% of GDP more.
Yeah.
If you take the profitability of the Canadian banks and you assume there's, say, 3.5 people in a household in Canada, each household is contributing about $3,000 a year to bank profits. That's pretty good, huh? Yeah. So they've got a good thing going on here. And how do you know that? When you look at the return on equity, right? So in banking, you're making loans, right? And you can have losses. So you've got to have some shareholders' capital in there. That if the worst comes to worst, they are the ones that bear the loss before a depositor does, right? This is how banking works. So the return on equity for the banks in total is 15% in Canada over the last couple of years. And that begins to fall off quite quickly to something like 11% in Australia and down more like 8% into the UK and into Europe. And even Europe is a little bit lower.
That's the average return
on the stock that underpins the risk in the banking system.
Okay.
Now, that's not telling the full story.
Has it really been 15% in Canada?
Over the last 3 or 4 years, 5 years rather? Yes.
Wow.
Yes. Consistently, right? So if you go, though, and take a closer look at the retail and commercial business of banks in Canada and look at their return on equity, over the last couple of years, it's been around about 35%. But when interest rates were down at zero, which prevailed for quite a long period of time, that was closer to 40%, which is a massive return. Now, if you look at that business of some of Canada's banks that are active in the United States, where it is more competitive, that return on equity is 8 to 12%, much, much lower. So it just shows you how much they are making in the domestic business where there is no competition relative to what they would make in the market that was more competitive. So the signs are there. The issue for many Canadians is I think that many of them aren't aware of it, clearly, but for many even that are aware of it, they say, oh, well, that's the price we pay for safety. Yeah, but it's costing you, right? When you think about the fintech, we have built a lot of fintech infrastructure here in Canada, right? The Neos of the world, Wealthsimple, you name it. They're frustrated because they can't get going, and we can't get that return on their infrastructure. because the banks have thrown sludge into the process, right? I mean, our former finance minister, Christian Freeland, apparently was not interested in open banking, was not really interested in pursuing competition in the system. She liked things nice and stable. And I'm not entirely sure who was whispering in her ear, but I suspect it wasn't the fintechs. So we sit here and we tolerate this. Now, if you don't have competition, you don't have opportunity, right?
Yeah.
So there are a lot. Youth unemployment in Canada is emerging as a serious problem, and that's because our economy is not vital. So
our economy is not vital. What do you mean by that?
It's not competitive.
Competitive. Hey everyone, before we dive back into the podcast, I've got a quick shout out about the Your Life, Your Terms report. This is Tom's weekly newsletter where he and Nick share real stories, experiences, and powerful insights to help you live life on your terms. Each week, Tom breaks down the economy, real estate, macro trends, and Bitcoin, and gives you actionable steps to make these insights work for you. No fluff, no vague predictions, just a clear path to thriving no matter what's going on in the world. Tens of thousands of Canadians are already getting the real information they need to level up their lives every week. I can honestly say it's the only newsletter that I've stayed subscribed to for years. It delivers real value that keeps me coming back for more. Join us and start getting the insights and tools to create the life you want, plus entertaining and inspiring stories from Tom and Nick along the way. Sign up for free at rockstarinnercircle.com/get started and start living life on your terms. That's rockstarinnercircle.com/get started. Your first step to living life on your terms.
So if you are a small and medium-sized enterprise in Canada, getting bank funding is extremely difficult. So the median amount of funding that's available to small and medium-sized businesses about 5 years ago was about 220,000. The most recent data, based on surveys that the Canadian Federation of Independent Business does, is down to about 156,000. This is for half of Canada's GDP and 2/3 of its employment. So that has given rise to things like the Business Development Bank of Canada. It's given rise to Export Development Corporation because there's clear failure to provide financing to small and medium-sized business. And really, the reason for that is the banks would rather cut mortgages to retail. Your business knows about that.
Exactly.
Right? That's partly subsidized by CMHC and banks like that because it's low risk, low volatility lending. And as they're not paying very much for deposits, it's very profitable, stable business. And so shareholders will reward them for that, right? So if you instead, lend to businesses, that's a more volatile income stream, and investors are not going to reward you for that, right? So the banks have an incentive with support from the federal government to push resources into mortgage financing. Well, if you're financing mortgages but you're not financing companies, where's your economic growth going to come from?
Yeah.
Right? So if you looked at Canadian bank balance sheets 50 years ago, about 40-50% of their balance sheet would have been in business, commercial and corporate lending. Mortgages would have been about 10% of the balance sheet, i.e. their loans. Today, it's completely flipped. And so the bulk of the balance sheet is now mortgages, and business lending is down around about 10%. Now, to some degree, corporate lending has shifted out of the banking system into the securitized markets. So we have to make allowances for that. But we have a real problem getting sufficient financing to companies that provide growth, that push us to the frontiers of innovation and development. We're not getting that from Canada's 5 or 6 large oligopolies.
So is this a separate issue from the inability to do open banking, the fact that they're providing so many loans to residential mortgages as opposed to businesses? Is it all tied up in the same thing?
They're obviously interrelated, but separate, if you like.
Yeah, they seem almost separate.
Right.
In my mind, it's like two separate issues.
Right. So should banks be doing mortgage lending? Well, I don't see why not. But if you wanted a 30-year mortgage at an interest rate was fixed at the time you took it out. You can't get that in Canada. You can get that in other countries.
Yeah.
Some entrepreneurs have attempted to come in and introduce that kind of a securitized mortgage product, but that's been blocked by the system. There are some technical issues like the Interest Act that make it a little difficult to do. But your obvious provider of a mortgage over a long period of time is an insurance company. But you don't see them in that business. And so governments step in with CMHC to sort of underpin the potential loss in mortgage lending. Because at the end of the Second World War, for instance, banks wanted 50% down payment on a house. And they couldn't get one, right? Because many people can't come up with that kind of money.
Even back then.
Yeah. And so this state intervention did make mortgages and housing available for a larger section of the population. So this was a good development if owning a home is preferable to renting. And that's a personal choice, but it also became a policy choice, right? Mm-hmm. So open banking, though, is a way to bring some discipline to pricing for everyday banking services, right? So it's to do the run around the incontestability of dominance of large organizations that prevent competition. The thing about, though, mortgages being such a large portion of bank balance sheets is that it actually diverts real economic resources into housing and construction, right? And so as the prices get bid up, all we're doing is changing the price that we charge one another for housing. Housing is a service, right? Unless you own more than one house, it's not really an asset.
Yeah.
Right. And so what we've done is we've used the banking system, or we've distorted the allocation of credit towards unproductive or low productivity sectors of the economy at the expense of taking risk in entrepreneurs that will drive our progress forward. So if you don't have, as an economist, stepping back a little bit, if you don't have constant innovation, if you don't have constant technological innovation, if you don't allow that innovation to be put to good work in the economy, your average rate of growth will slow down, right?
As it has.
Correct.
And I mean, our whole business exists because of all the incentives in Canada for people to just buy a house and rent it out to make more money or have a surer path to making money than they would by starting an actual business here.
For most people, their single biggest asset is a home.
Yes.
I've just said it's not an asset, it's a service. It's an asset perhaps when you know, in a couple, usually the husband predeceases the wife eventually dies and kids get the money, then it's an asset for them.
Yeah, and it's usually the biggest chunk of wealth in the average Canadian's portfolio.
It is by far the biggest chunk.
By far.
Because very few of us own financial assets in any significant size.
Yes.
So, you know, everybody used to say, it's everybody's right to own a home. And the other way to think about it is everybody's right to at least have a shake at getting rich. And that's why it's an important part, cultural part, an economic part of our asset accumulation. And Canada's not alone in that.
I didn't realize the just sheer degree of difficulty in getting business loans compared to residential mortgage loans.
Yeah.
I mean, it just further explains kind of the situation that we're in Canada and all the incentives that drive us to invest in real estate instead of investing in a business.
So I'll give you an example. It's quite amusing. So I set up a consulting and advisory business about 5 years ago. And so I got my business account set up at my bank. They were very good about that. And the guy phones me up and says, hey, Mr. Spence, would you like a credit card? I said, yeah, I'd love a credit card. That'd be great. Because I need, you know, I've got business expenses to manage, and I don't want it interfering with my personal accounts, right? So I said, yeah, that'd be great. Could you give me one for 10 grand? You know, I might do some travel, whatever. He said, yeah, no problem. Comes back 4 weeks later, says, got a bit of a problem. I said, what's that? He says, I can give you $1,000. I said, oh yeah. I said, I've noticed every bank will offer me a $1,000 business card.
Yeah.
You're my principal bank. Oh, well, you know, some BS answer, right? I said to him, okay, so $1,000, what's the fee? He goes, oh, it's $150 a year. I said, okay. What's the interest rate if I don't pay my balance off? Oh, that's like 20%. I said, so okay, let's just think about this. So really, at the end of the day, what you're saying is that you want me to pay up to 35% for a line of credit, basically, revolving line of credit. Well, yeah. And I said, I think your $1,000 offer is really fishing for the $150 fee. So I said, come back when you're serious. So after about 2 years, they thought my business had repeatable revenue, and they said, how about $20,000? So I said, yeah, finally, let's do it. Right.
Okay. Whereas if you had gone to maybe American Express, would that situation have been different?
I had another credit card anyways. It didn't really matter.
Okay.
But I thought it was interesting that my principal bank, the one that was happy to provide me with a deposit account and payments facilities, was not prepared to open up credit exposure.
Yeah.
More than $1,000. And it was quite clear they were not in the business of giving any credit whatsoever to a young, untried business that had no track record. Mm-hmm. They wanted to see, is this guy serious about this or not, right? And once they saw it was a viable business, then they were prepared to provide the credit. And I think that, don't be any illusion that banks are not in the business of risk as a small business. They are in the business of collateralized lending. So if you want a reasonable amount of funding as a business, it's got to be more than proof of concept. Mm-hmm. They want to see that you've already built a good chunk of equity in that business that you are prepared to pledge, or they want you to pledge your personal assets. Mm-hmm. So they're not in the business of risk, right? So banks have morphed from being lenders to big, comprehensive, universal financial service providers. And we know that because if you look at their total income in any given year, it's about half and half, depending on the bank, between what they make making loans and what they make on all the fees. So what are the fees? Foreign exchange fees. Egregiously high, right? Because the price they show you is well off market on both sides when you're buying and selling.
Which is typically what, like 2.5%?
Well, maybe more.
Really?
Well, most recently, I remember walking past the bank, my bank actually, and it said, I'll sell you US dollars at 147. I.e., if I don't want to buy 1,000, I've got to give them 1,470. And they said, I'll buy it off you at 141.
It's a big spread.
Right.
Yeah.
So if I suddenly changed my mind about traveling and I went to sell it back, I'd lose a significant amount of money.
Yeah.
And you see that in your credit cards when you transact overseas. The Interact fee, for instance, right? Because of like I said before, the Interact messaging system is it's near on obsolete relative to what's available in other countries, right? So they constrain you to very small daily limits because they can't be sure that they can't manage the fraud properly, as I understand it, right? So every time you tranche these things into smaller pieces, if you had a $9,000 bill to pay, say you got, I don't know, some work done on your house or whatever, the construction guy wants $9,000, you say, I can pay $3,000 today, $3,000 tomorrow, and $3,000 the day after. But every time I push that money through the system, I'm getting hit with a charge instead of one charge, and all done at once. So the analogy I use is, imagine you're a trucker, right? You got a truckload of goods you got to take across a toll bridge, and the toll manager says you got to do 3 trips because you can't bring the whole load over. And every time you go over, you get faced with a toll, or you have to pay the toll. So we have all these fees that we got to pay for all these services. They are frictions that are introduced artificially to improve to expand the nodes where you face a fee. But I mean, the biggest fee of all for these guys is wealth management fees, the fees that you pay on mutual funds. And that business has been challenged by the emergence of exchange-traded funds, which are at much lower prices. Mm-hmm. You have people with money sitting with investment advisors that charge a flat fee for their services. People need those services, don't get me wrong. But the issue is, how expensive are they relative to alternative providers? And so if you go through the fee income at many of these banks, you find that the single biggest category of charge is in the wealth management space. Mm-hmm. And having been having been an institutional investor, banks are more in the business of gathering assets on which they apply a fee than they are giving you a managed return that gives you a decent service for your fee.
Yeah. They're just there to skim off the top.
Well, you can put it that way. But the business is, if I gather an asset and apply a 1% fee, I'm going to make a lot of money, right? Yeah. And for the banks, it's a massively good business, right? Because their cost of raising funds, i.e. getting money in the door, is next to zero. So imagine that you were fortunate enough to sell your business at the end of your working life and you got some astronomical figure and you go to your bank and say, yeah, look, I've got all this cash. What am I going to do with it? And they say, oh, put it over here in my funds. Mm-hmm. How much did it cost them to go out and seek you as a client? Nothing. Right. And so if you talk to some of the independent asset managers in Canada, they say it's very, very difficult for them to even show a client a financial product that might be superior to a run-of-the-mill mutual fund or ETF, because the banks have already captured the client. And so this is another sort of, uncompetitive friction that's contributing to healthy revenue.
Mm-hmm. Would you say at this point the banks are here to fundamentally serve us or to serve themselves?
So when people ask me to dedicate my book and sign it, I say to them, ask not what your bank can do for you, but what you can do for your bank. Images of President Kennedy.
Yes. Wow. Okay. And it's not just banking. I've never really thought about the banking oligopoly because I guess it had some appearance of maybe being a bit more spread out between the 6 banks. And then you've got some credit unions, which I don't really understand how that all fits in. And in real estate, I'm familiar with, monoline lenders and these different, B lenders, Equitable Bank, like these smaller branches. So, I mean, the one common example that every Canadian knows and complains about is the telecom companies. It's Rogers and Bell, right? Are the only
TELUS, yeah.
And TELUS,
yeah.
3. So 3 of them. And we know that we have some of the highest cell phone and internet bills in the entire world. And we all know it's because they have a stronghold on the market and it's not open. But you were mentioning other industries as well at the beginning that are like this. So what is it? Is this all coming from the federal government level because they have the regulations on these countrywide or big institutional corporations? Is it that they're in the pocketbooks of these companies? Like obviously in the States, that's a big problem with lobbyists, right? You hear that with big pharma, big food. We also have some of those problems. Is that what it is?
You've asked many, many questions in that. So let's just establish a few facts first. Telecom. I mean, we pay pretty much the highest price in the world. So for a gigabyte of data, I think in Italy is 40 cents. Canada's about $5.40. Wow. Think about that for a minute. Just how much more we charge. Why is that? Because in the mid-1980s, Canada introduced the Competition Act that was written by the very people it was supposed to police. So we put the fox in charge of the hen house. Mm-hmm. And it took us 40 years to get to grips with that. So in 2023, Canada introduced, with all party support in the House of Commons, a change to the Competition Act that significantly improved the competitive landscape in Canada and empowered the Competition Bureau to start to pursue obvious non-competitive activity. Now, that's not going to get to grips with the banking oligopoly and the telecom oligopoly. That's going to take federal government intervention to make changes to things like the Payments Act and whether Interact should be at the center, right? At the same time as you have emboldened now the Competition Bureau to do what they call market studies, they at one point they could not subpoena data from companies to investigate things like potential collusion, right? Like the bread fixing scandal we had in Canada with the grocers. They had to ask, please, could I have the data? And then if the company said no, they couldn't get it. Now they can get the data, so they can really get to grips with potential anti-competitive behavior. But it will take a change in legislation that governs the regulated industries. So a friend of mine recently worked for a lobby firm, as a public affairs firm, as they called themselves, in Ottawa. And he said, our clients were all the big regulated industries that are seeking preference from the federal government, either in heading off changes in legislation before they happen, or lobbying for more protection. So that's a serious issue for us. That's why we have a registry of lobbyists at Parliament. Now, there's a French economist, Thomas Philippon, who tells a great story how he left France around about the year 2000 to go to MIT and do his PhD. And he was astonished how low prices were in the United States when he got there compared to France. And the more he dug into it, he realized the economy was simply more competitive. And then a couple of decades later, he goes back to France and he says, hey, wait a minute, France is cheaper now than the United States is. Very simple reason. In North America, we have allowed merger after merger after merger that has not been adequately policed, if you like, where we have allowed, well, the United States has allowed fewer and fewer providers of services. And so they've done what? Put the price up because they can, because the competition is missing. And so the US authorities, until about 10 years ago, were not taking antitrust, i.e. the legislation that deals with whether a merger is in the is competitive or anti-competitive, seriously. Now they're starting to, but it's taking time for them to catch up because the law had been neglected for about 30 years. Meanwhile, you go to Europe and, the Anglo world likes to, look down on Europe as being this sort of sclerotic, bureaucratic place. Mm-hmm. But they've actually got to grips with regulation, and quite tough. And why is that? Because, in the old days, a French telecom company, let's say, wanted to go to Italy, and it was blocked by Italian interests. And Italy wanted to go to France, and that was blocked by French interests. So they sort of ran the white flag at the mast and said, okay, let's push this regulation up to the EU level, because now the EU will decide whether or not an Italian company has access to the French market, right? And so what that's meant is that Europe has become, at the margin, more competitive than it was before. And so there was one new entry into the French telecom market that saw a reduction in telecom prices by about 40% overnight. Just one small company just happened to be there, offering a price lower than the dominant guys, and that was enough to bring the price down. Now, there was, I believe, an Egyptian entrepreneur that came in with Wind Mobile and attempted to do the same thing. I was thinking
about Wind, actually, in my head, because I remember when I was in high school, the only cell phone plan I could afford was Wind Mobile.
Right.
And I didn't have service half the areas. This is a while ago. I'm sure it's gotten better. But it was the only thing I could afford, but it was half the price.
Yeah, and he eventually gave up, traumatized by trying to deal with the bureaucracy in Canada. Canada is also not considered to be a particularly welcoming sovereign.
Are you talking about Bryce?
No.
Okay, no. I think it was the founder of Wind Mobile that spoke at our event.
Well, maybe it was.
I missed his talk. Yeah,
I think that was the guy that had the traumatic experience was the guy that provided the capital to try and make it work.
Okay,
but Canada's not seen as a particularly welcoming jurisdiction, because I remember trying to help the entrepreneur that wanted to provide residential mortgage-backed securities to introduce what he called a payment lock mortgage, right? Which for 30 years, the rate you secure when you take on the mortgage is good for the next 30 years. So you got a lot of, at the right rate, obviously, you'd have a lot of financial security. Of course, he couldn't get the warehouse financing to get it going. Clearly, the banks wouldn't give it to him, right? Because he'd be eating their lunch at some point. And, insurance companies were a bit iffy about it. So I talked to a large non-Canadian bank about whether they would be prepared to provide that warehouse financing. And the guy in the Toronto office said, that's a good idea, I'll take it back. He came back and said, you know what? Management thinks that, that would attract too much attention from the Canadian authorities if we were to do that. And we don't think they would welcome it, and we don't want to upset them. So, We are seen as an organization that still has a sense of you need national control over your own businesses, that we as Canadians can do it. We don't need anybody's help. But at the end of the day, it means we don't get, at the margin, innovative product and interest from non-Canadian organizations that might deliver some more competition.
So is this like a mass cultural issue?
Yes.
It's a cultural issue.
It is, I think.
Do you think it's that our federal government itself is captured?
Yes.
Do you think it's that most institutions in Canada are captured?
Well, they're the ones doing the capturing.
Yeah.
Right.
Well, it seems like I just get this overall feeling, intuition, that the current system we're in, and that's an overarching statement, is set up to serve itself versus the people it supposedly is supposed to serve. And I feel like our government is like that at the federal level. And I feel obviously all these corporations run oligopolies, but that just seems the overwhelming intuition I get.
Well, happiness in the the pursuit of happiness, or peace, order, and good government. I mean, our foundation principles comes out of the UK, when the colonies that eventually became Canada brought a rather sort of centralized system of government to bear. You look at the banks; it goes all the way back to what was called the Family Compact in Ontario, Upper Canada, which was really an arm of the Church of England. Banks were set up to facilitate the exploitation of resources which were then shipped to Europe. So we have very deep roots in a small group owning and running the economy according to a set of beliefs that they have put down. But I think those beliefs are clearly increasingly out of touch with the rate of technological change,
yes,
with the rate of progress in economies around the world. And we focus here in Canada on the process of thinking about change rather than the end result of the change, finding the change we need. Mm-hmm. So we're very, very slow and very, very sluggish. One fairly senior economist in the Canadian scene told me when I did the book, he said, well, Andrew, these were the issues I was concerned about 30 years ago. So best of luck.
Mm-hmm. So what needs to happen?
We need leadership. We need to think about what is it. See, there are two sources of obstruction, one willful and one institutionalized. The willful one, I think, is the resistance to change by our political leaders, right? Because if you change in leadership is difficult. When you lead and you want to take a country to where it should be, and it's going to cause disruption and discomfort, all political careers end in failure. If you do that, yours might just fail a little sooner than it otherwise would, right? So if you're going to lead change, it's very lonely and it's very difficult. And so we haven't had leaders in Canada that are prepared to do that. Brian Mulroney, actually, to his credit, introduced the GST in the early 1990s to replace a hodgepodge of highly inefficient taxes. And his party was decimated because of opposition to that, plus free trade. So there were two big policy changes that had a huge effect and were positive that were not rewarded by the general population, right? So that's a lesson for politicians. And so they're very cautious about the change they are going to render. So the fact that we're finally, getting to grips with interprovincial trade barriers, which is
insane.
Ridiculous.
Insane. I don't think the average person, myself included, even knew those existed prior to this trade war with the USA.
Well, exactly. So it took policy chaos in Washington and the threat of closure of access to that market to find.
It's like Trump's, love him or hate him, but Trump's disruption down south with his leadership, whether you support him or don't, is now causing us to rethink a lot of what we do
exactly.
up here.
It's sort of necessity is the mother of invention. Right? But
take that as you will, but it's like...
I think it was Tip O'Neill, right? The leader of the Democratic House when Reagan was, so old I am, was president, said all politics is local, right? And that's why we have these interprovincial trade barriers, because, local interests get to their provincial politicians, say, I don't want, electricians coming from Quebec to work on this project because they're going to compete with my members here at home. I mean, that's the origin of it, right? So anyway, let's come back to where the political leadership is important, and the incentive set means that you've got to be a pretty strong character, especially to say, you know what, I'm sorry, Mr. Mackay, and, Mr. Porter, I guess he's gone now, but we're going to do this whether you like it or not. Whereas Glenn Stevens, who was governor of the Reserve Bank of Australia, said, you're going to do it whether you like it or not, right? So, it's not part of the Canadian culture to be confrontational, right? Because my own experience working here compared to London is that Canadians confuse candor with conflict, right? So,
sorry, what does candor mean?
Candor means you speak plainly. These are problems we have. We need to deal with them.
Yeah.
And so that's often seen as, oh, you're not a team player. Oh, no, he's difficult.
Yeah.
Right.
So there is a cultural issue.
Yeah, there's a cultural issue there. Anyway, look, then there's the bureaucracy. The bureaucrats themselves want stability, right? They
want to keep their jobs.
Well, yeah, but it's not just that. I mean, senior policy makers in all levels of government are really important people. Many of them are very talented, and we wouldn't have the modern societies and economies we do, such as they are, if we didn't have those people. So we shouldn't really characterize them pejoratively and say, oh, well, they're just covering their arse. They are working to, we need some stability, we need some order, we need to we can't make rash decisions. And they're more conservative than most of us, which is probably why they have the job in the first place, right? But we should value them. The problem is they don't get direction from their politicians, right? So if their politician is dragging their feet, then they will too, right? So you need a cultural change from the top to the bottom, right? If you give our bureaucrats an incentive and direction to push through change, they'll do it, right? Because people at the finance department were extraordinarily frustrated with the political leadership over the open banking file. Many of the bureaucrats wanted it to happen. They just couldn't get the minister there.
Because the Overton window, the consensus wasn't there to make the change.
Well, the banks didn't want it, and they had the ear of the minister. And, I call it the myth of...
They have the ear or they have the wallet? You would think somebody with integrity would want to serve their people, would want to allow competition.
It's not a question of corruption, no. It's not that at all. It's a question of, well, Minister, if we make these changes and go wrong, we warned you it wasn't a good idea. And it'll be on your head, it will be. And that creates doubt about whether or not that's the right thing to do.
It's more self-preservation.
I don't want to take the hit.
You don't want to rock the boat.
I don't want to take the hit if it goes wrong.
Yeah.
That's really the issue, right? And look, change is difficult. Disruption is difficult. Because what happens in disruption and change like this is the costs of the change are very heavily concentrated, but the benefits are spread widely over the whole economy. The whole economy is doing better, but the people that end up carrying the can for the change are the ones that are hurt the most.
Short-term pain for that long-term.
Well, it can be a long-term pain for a very small cohort of the population, which is why Donald Trump is president, right? Because, offshoring and robotics in manufacturing created heavily concentrated losses in certain parts of the country. And many people were held hostage by that, right?
Yeah.
So you have to be mindful of that. So we need a cultural change. We need to start to say we cannot afford the luxury any longer of wanting and hoping tomorrow to be like yesterday. We have to create our own new tomorrows. And that means we have to embrace change. And that's a cultural challenge for our bureaucracy and for our companies and for our legislators. But the costs are clear to all of us of failing to embrace that change to date, right?
So it's got to be a bottoms-up change in thinking as well as a top-down.
Correct.
Okay. Do you think there's any leaders or parties currently in Canada that are capable of that change or speaking in a way that they at least want to change?
I don't know the answer to that question. I would say culturally we haven't got there so far. Mulroney led change, but he paid the price for it. His party paid the price for it. And I think that's writ large in the imagination, in the psyche. I think the other part, coming back to banking, is what I refer to as the myth of Canada's good financial crisis, right? Like I said at the very beginning, our banks have such good, stable, reliable revenue protected by the state that they don't have to reach out, get over their skis, and take chances in terms of lending. And Canada had the right approach to bank regulation to begin with. You got to have lots of capital, much more than the international agreement said was necessary. The banks themselves topped that up. There were limits on how levered their balance sheets could be. And so when things went south, they were in a better position. But what most people don't realize is there was still substantial state support for the banks. The finance department, for instance, bought many illiquid mortgages from the banks, took them onto the state balance sheet to liquefy them, right? There was a lot of borrowing going on from the Bank of Canada over that period of time. We just didn't have the state come in and show an obvious recapitalization that you saw.
But it was happening behind the scenes.
To a degree. And the banks in Canada were able to raise, because they all had to do a capital raise, but they were able to get it from institutional investors because their business was more stable, right? One of the big problems you had with the global financial crisis was the proliferation of complicated mortgage products. And so investors weren't sure whether those assets were money good, i.e. there was real value in them. And if there were going to be losses, it wasn't clear where in the system those losses were. And so everybody pulled back until that situation stabilized. We did not have to go through that in Canada. That's mostly a product of regulation. It's a product of the structure of the banking system, the lack of competition, and the lack of pressure on the banks to actually go out there and earn their crust by taking risk, right? So like I said before, there's a bailout coming every day because of the lack of competition that leads to these extremely high prices that we have to pay relative to other jurisdictions.
Mm-hmm. And we're all subsidizing the banks, essentially?
Yes.
Yeah.
Yeah.
Okay. So it seems like a political issue, though, because it all stems from those regulations.
Yes, it is.
So
we need leadership.
It's us understanding the problem and then voting in the leaders that are talking about the problem and intend to do something about it.
Yes. So we've got a new prime minister.
Thoughts?
I know Mark. He's a very serious fella.
Did you work with him?
I was seconded to the Bank of Canada in 2002, 2003 for a year, which meant I went there for a year.
Okay.
And I was involved in policy making. I met Mark as he was coming in as the new deputy governor, so we overlapped for a month or two, mm-hmm. and then I grew to know him over time. He's a very serious guy. He's a very good leader. But, will he take the bank file? We don't know. Because he was a big supporter of open banking in the UK when he was at the Bank of England. Big supporter. Canada has some pretty serious challenges right here, right now, with what's going on south of the border. I'm not sure this will be high on his list of priorities.
Sure.
We will have to see. I think if you think about plus ça change, right? The more things change, the more they stay the same. It's still the Liberals in power as a new leader. But I think the last Liberal government really didn't care much about economic policy.
Right? Yeah, you could say that again.
So I think...
Wasn't he the advisor, though?
Don't know the details.
Sure.
But Mark will take economic policy more seriously. But I don't know what's top of the list. We will see. But it will take a backbone to deal with this problem. I think that I animated in the in the context of the payment system problems and the technological antiquation of our payment system is the conflict between public interest and private interest. To date, the private interest has won. But it's done so using the leverage of, well, do you want to change this nice stable system we have? Even though it's partly based on a myth. And partly the reasons it's stable is because of the regulation of the banks by OSFI. Well, we can still keep that regulation, but we can still introduce competition.
Yeah.
So that needs to be challenged, right? My view is that you need to take it's called the Office of the Superintendent of Financial Institution. It's the supervisory and regulatory body of the banks and insurance companies, anything federally chartered, pension plans as well. I think they need to be modernized. They need to be given a dual mandate. And that dual mandate is not just stability, but also competition. And if we were to do that, I think we'd begin to make some progress. But at the end of the day, the finance minister, Monsieur Champon, has to have a backbone to say, finally, we are going to, at the very least, bring in open banking to introduce an element of competition.
Mm-hmm. Okay. So in your book, what do you describe in your book that we haven't laid out? Is there other stuff for people to check out?
So we didn't talk about, we talked a little bit tangentially about nice stable income, the banks like that, and that's why they've backed away from lending to small and medium-sized businesses. That's in the book. There's a deeper dive into fees, right? And fees relative to other jurisdictions. We talk about the corporate lending. We talk about the financial crisis, some of the details around that. There's a chapter on what we didn't even get to here, which is what's called decentralized finance, DeFi. All the things that emerge from the emergence of cryptocurrencies, for instance.
Yeah.
Right?
I don't know if you could tell, we're into Bitcoin a little bit around here.
Well, yeah.
I don't know if you saw the Bitcoin shrine behind me.
No.
But the whole time I've been wondering how much you've looked into Bitcoin.
Well, actually, one of the big academics on this is Canadian. It's Campbell Harvey, who's a business stroke economics prof at Duke University in the US. You'll need a pile of wet towels for your head if you read his book, DeFi and the Future of Finance. But he shows quite convincingly that this has the ability to make life more difficult for banks, even the existing fintech does. Now, there are some problems with the regulation of cryptocurrencies that need to be dealt with, hence the emergence of what's called stablecoin, mm-hmm. right, which is linking the value of a crypto to the currency of any economy. One of the reasons that regulators will not tolerate cryptocurrencies becoming dominant in the way they currently are without some regulation is largely because what gives central banks control over the economy, their ability to manage them well, to keep inflation stable, is because they have control over the payment system, right? Mm-hmm. So if you allow that payment system to move completely outside of some sort of central authority, then they will lose their ability to stabilize the economy. And that's not necessarily a good thing, right? So what gives the state control at the end of the day is they need a currency for you to pay your taxes in. And they're going to say, it's my currency. And if you want to use a crypto, then it has to be, I don't know, stable coin, not Bitcoin, not Ethereum, whatever, right? So this says there's an intersection between the system we have now mm-hmm. for good control, and that's necessary, and what's going out there in the crypto world, because at the moment cryptocurrencies are a lot more volatile than the sovereign currency, and so you need elements of decentralized finance to be stable to interact with kind of centralized finance for the time being. So that's still a work in progress. The irony, of course, is the more you introduce stabilizing parameters to the crypto world, the more it begins to look like the world we've already got. Do you understand what I mean?
Yeah.
So if you have, exchanges and you have collateralization to deal with the relative volatility of cryptocurrencies relative to sovereign currencies, you're starting to concentrate now economic power, in a few areas which undermines the whole
ethos
of having decentralized currencies that are not in the control of the sovereign.
Yes.
So there are limits to where we can go. I mean,
with stable coins, yes.
Yeah, exactly.
Bitcoin is like an open banking monetary.
Well, it's its own thing, isn't it? Really, I mean,
it's complete. It's the one thing outside of the system.
Yeah,
uncensorable.
Well,
peer-to-peer transactions,
but it's on a blockchain, right? So there's an accurate record.
Yes.
Right?
Yeah. Yeah.
So there's this big people talk a lot about criminals using cryptocurrencies, right?
Mm-hmm.
But there's actually a record.
There is, yeah.
There is, right?
Yeah, yeah.
So there's
pseudonymous.
There's a bag. There's a big, like massive tote bag on the internet called the Hawley, which will fit $1 million in $100 bills perfectly, and that's available on the internet. And who's going to want a big tote bag to carry around $1 million? It's not me or you. I would hasten.
Yeah, it's criminals.
Yeah.
Yeah. Yeah, but it's an open ledger. It lives on the internet.
Yep.
Anybody can look into it. And if there's ties of those coins that can be traced back to a centralized exchange, and then your ID is tied to that centralized exchange, then it doesn't have that anonymous aspect of it, right?
Correct. So the whole blockchain thing actually grew out of document keeping tabs on documents such as legal drafting, so that you knew exactly where the most recent version of the document was. Mm-hmm. So that's the origin of blockchain.
It'll be interesting what happens, the collision of these two worlds, the centralized local banking, local interests versus open, global, uncensorable.
As long as you are compelled to pay tax, and as long as you can face a criminal penalty if you don't, that's going to give the state control over currencies.
For sure.
So it's not, the whole cryptocurrency world is not going to be the fantasy land that many libertarians would like it to be. Mm-hmm. Maybe under the current leadership in the United States, you might see some deviation from that over time, but there will be downsides to that.
Mm-hmm. Yeah, it'll be interesting. It's a clash of two worlds, right? The centralized control versus the decentralized openness. And we'll see, I guess, what triumphs over time, because they are kind of colliding. And you have a choice. I mean, you're right. If you are in the centralized control system, which 99.9% of all of us are, then you must use the local currency. You must pay the local taxes.
You got to, right?
But more and more you can opt out into another peer-to-peer network, which does give you an ability to transact, to move value, to hold value, and more to spend that value outside of that centralized control system.
Absolutely. So we've got that already with fintech. It's just cryptocurrency takes it to the next level.
Yes.
And we don't have that in Canada yet, right? Because we don't have the open banking thing, but we have to catch up.
Yeah. Okay. So what can we leave people with? It's been a really informative discussion. I've learned a lot from you. When it comes to making that cultural shift, what Canadians can do if they feel compelled to do something about this, what would you recommend?
If you don't want to do anything about it, buy as many bank stocks as you possibly can. Right? If you want to do something about it, we think about democracy as showing up every 4 years to cast a vote. That's not what democracy is. You have an elected representative for a reason, because the state can tax you. So if you feel like it, send them a letter. Say, listen, I'm really unhappy with this oligopoly. You control it. You issue a bank charter. You give them this privilege. They're feathering their own nest at my expense. I want you to do something about it. Canadians aren't terribly motivated to engage in that way.
No.
So get up to speed on open banking. Realize what's out there in the rest of the world and say you want that change. Because then you'll start to understand just how badly you're being served by your bank. You've understood that you can go to Wealthsimple to start to get access to that stuff.
It's a much better product.
Go out there and take advantage. I'm not here to shill for Wealthsimple, but they're offering versions of open banking because they've become so totally frustrated, waiting for our political leaders to blaze that trail.
Yeah.
So Canadians go out and find out what open banking is. What is an API, Applications Protocol Interface, which is the key piece of technology that's going to give you, like most of my British compatriots access to 150 odd providers of financial services at a much cheaper price than your bank can deliver, for much faster processing times once we get technology in place. So make yourself aware, get yourself ready. Do not be beholden to your bank. Mm-hmm. It's convenient, sure, but it's very, very expensive. So get yourself informed.
Yeah.
See what's out there. Avail yourself of whatever services are and start lobbying for change because you deserve it.
Yeah. Vote with your dollars too. Like after I opened my Wealthsimple account, I realized it was just a lot better. It was a lot better user experience. It has a great card product, which has the no foreign exchange fees. I load it up like a bank account. When I go travel internationally, I use that card to spend. So I get charged no foreign exchange. I get 1% back, but I choose to have it paid out in Bitcoin and it goes to my crypto account. Like it's just better options.
But imagine if you had an API that wouldn't have to be Wealthsimple, wouldn't have to be EQ Bank. It could be Wise, could be Revolut. All these businesses are already going globally. Mm-hmm. You can just go to the best possible price. You would not be beholden to one institution at all.
Because Wealthsimple's Canadian only.
Yeah.
Yeah. So I'm still limited.
I mean, it's better than what the banks are offering.
Sure.
Right?
Yeah. Yeah. Higher interest in my account.
But the challenge for Wealthsimple once and others that are in that situation that once open banking comes in, then they're going to have to compete with that as well.
Yeah. And they're just going to get smashed.
I don't know if they'll get smashed. I think.
But if someone's had a global head start and then all of a sudden they're allowed to operate in Canada, I mean, to your point, like the longer you delay the inevitability of the world opening up digitally,
more traumatic that disruption will be. Yeah,
exactly. Yeah. Get wise to it and study DeFi. That's another thing.
That's right.
Study DeFi. Just keep listening.
That's the next revolution after we catch up with fintech.
Yes. Yeah. Very interesting that you would say that after so much experience in the banks. Like you see that's the writing on the wall.
No question about it. They do too. And it won't help you to put it off. That day of reckoning is going to come.
I drive by, there's a TD Bank branch right there on the corner, and I drive by it every day, and I'm like, you guys are so done. I just think you guys are so toast. Well, this antiquated brick and mortar store where you have to go and beg to withdraw your money out of the account and deal with them trying to sell you mutual funds as you go to withdraw $5,000 so you can go buy a used car and have to let them know exactly what you're doing with your money. I just can't wait to see them go, to be honest. I hope all the employees get great jobs and they're all comfortable, but...
Well, see, here's the irony, right? I mean, there are a lot, and I know many of them, there are a lot of really, really, really smart people in the Canadian banks.
Of course.
But we don't give them the incentives to develop.
No.
Right?
Yeah.
It's like when kids get a job working at Tim Hortons, it's like, I've got to go in there. But they want to go to Starbucks because it's kind of funky and fun.
Yeah.
Right?
Innovating.
Yeah.
Yeah.
So if you have to respond to market forces, it's a better experience. It's tough, but the quality of the opportunity is better.
Yeah. Beautiful. Okay. Where can people check you out or get your book?
You can get the book, again, on Amazon.
Yeah.
You can get it directly from the publisher, Sutherland House Books. And it's out there for you.
Okay. And if somebody wants to check you out, are you anywhere else?
I'm on LinkedIn.
Okay.
I'm on Substack. I do sort of general economic stuff on Substack because people ask me to, but it's not a key part of my business.
Okay, cool. And the book, once again, is Fleeced, Canadians versus Their Banks.
Correct.
Yeah.
By Andrew Spence.
Yeah, I get upset just reading the title.
Yeah, just don't throw your tablet
at
the wall if you get it online or through Kindle.
Awesome. It was a pleasure. Thank you so much for coming in,
Anthony. Thank you very much for having me on.